This is the Financially Simple Podcast, a show dedicated to destroying the complexities of money for today's small business owner. And now, here's your host, pizza-loving, certified financial planner, Justin Goodbread.
Welcome to Financially Simple. This is a finance show for small business owners about money, how it works in our business and personal lives, and how we can build wealth to be financially independent. I'm your host, Justin Goodbread, and today I have a special guest on the show. Today, joining me from the greater Nashville area is a friend of mine, a colleague that actually works in a different business named Chris Mahan. Hey, Chris. Thank you for joining me on the podcast today, brother.
Hey, Justin. Thanks for having me. I think it's going to be a blast.
So, Chris, tell me a little bit about you and tell me a little bit about your practice.
Sure, man. You know, my brother, we're having our 28th birthday on Monday, May 14th. He founded the company in 1990. And I was in college and I was waiting tables and decided to come work here at Mahan and Associates, which is a full service business solutions. We target the healthcare industry and all verticals underneath the healthcare model. And I started working in the mailroom and worked my way up to partner. So I made it big and I've been here ever since. Yeah. And so, man, again, I work and I spend time with my kids. I'm at the ball field a lot in the spring and the fall, playing soccer, softball, and tax seasons. I try to get some golf in every now and then.
I hear you. So in your practice, Mahan Associates, you guys, as you mentioned, you're primarily working with, I'm going to call them entrepreneurial doctors or those doctors who are employed. Is that correct?
Correct.
And you're not working just solely with business owners. I'm assuming you also have clients who are also W-2 employees of hospitals, et cetera, correct?
Yeah, that's most definitely.
Now, in y'all practice, do you work with anybody outside of those in the medical world?
We have some law firms that we work with and service because it's a similar service mix industry.
Right.
And we have a few specialty clients, but for the most part, we stay in the healthcare segment.
I brought you on the episode today to talk about tax planning because you and I have some mutual clients and we end up doing a lot of tax planning together for mutual clients. But you yourself, you're not a CPA. Is that correct?
That is correct.
But you are an MBA and a wizard at tax planning. How can that be?
Oh, that's great. You don't have to be a CPA to be a tax strategist, which is the most important component, or a tax preparer. And at Mahan and Associates, we have enrolled agents, MBAs. We have the alphabet soup of certifications. Right. But what we try to build is the balance of professionals to deliver a comprehensive strategy. So we can coordinate with advisors such as yourself to ensure that our clients retain as much of their money so they can build their wealth and financial success. So, you know, with enrolled agent certification, which many people in our firm have, they can represent clients and taxpayers to the fullest extent similar to a CPA.
Right. So, Chris, in the podcast, we've already interviewed tax attorneys. We have CPAs who are actually coming on the show. But I've often said that clients need to hire a three-legged stool. They need to have a good planner, someone who's forward-thinking. They need to have somebody who's on the tax side helping them with tax planning and tax minimization strategies. And they also need a good attorney. And so, correct, particularly in your case, with some of the clients that you and I both work with, mutual clients, and then we kind of know about what each other do as far as professionals, I felt like you'd be top for me to bring on to ask you three targeted questions. And you have those, but for the listeners, I view Chris as one of the parties of a three-legged stool. Chris, I view you as someone who is there trying to show the client how to minimize their tax liability. But not only that, and this is the reason why I like you in your particular role with Entrepreneur Doctors, is you're not just dealing with tax. You're also looking at how they can improve their practice. Is that correct?
Most definitely. How they can optimize the top of the line, how they manage the expenses to maximize the bottom line, and then what we do to protect that bottom line dollar.
So the cool thing that I like about Chris, folks, is that Chris doesn't have the ego. And you've heard me say about this, and Chris, you're going to probably on the other side start shaking your head on this. We've seen in our professional world the not invented here syndrome, to where if the professional didn't think about it, they're automatically going to come down and shoot it down. One thing I've liked about currently working with you is that, you know, you and I have volleyed a couple of different ideas via email on one particular client. And we're like, yeah, Justin, that's a good idea. Or no, Justin, that sucks. Or I'd say, Chris, that's a good idea. Or, hey, Chris, think about this. And
exactly.
Do you view that as a vital component to reaching the client's optimal performance in their business?
Most definitely, Justin. That's a great point, is that coordination amongst advisors, from the financial planning and investing and wealth building, which a lot of things that you do, to the tax planning, which a lot of the tax planning that I'll get into in a little bit is about how they run the business.
Right.
So many business owners look at taxes as the end game and, I made a lot of money or I didn't make money. Here's my stuff. Tell me what I owe for taxes. When they really need to be saying, this is how I'm going to run my business to save taxes. And then the coordination between advisors, like you just mentioned, is imperative. And if they have that would deliver tremendous dividends and return on investment over the years. So I really appreciate the relationship that you and I have, and the fact that you get an idea, you shoot me an email and I'm like, man, that's a great idea. Let me research it. And you and I, in our coordination helps us better serve our mutual clients to a much higher level.
So you just given me a perfect segue into my first question I have for us. And that is, Chris, from your opinion, what are the three most important accounting or tax items that entrepreneurs can do to help their team, that you and I are the professionals involved, help them minimize their taxes? What do you view of those top 3 or 4 things that a business owner can do?
Oh, great. Yeah, that's a great question. Again, Stephen Covey, who, wrote the 7 Habits of Highly Effective People, I believe habit number 2 was begin with the end in mind. And so many, look at taxes. If they start their operation, if they start their day-to-day processes with the end in mind of thinking how they can utilize the tax code, which again is a good thing, not a bad thing. The tax code is an incredible wealth building opportunity if people just assess it and build their business operations around utilizing the tax code. So one of the first things is, protect your money. And that's where the accounting and bookkeeping comes into play. And also their operations, their systems that they have in their organization, from internal controls to protect themselves to the highest capacity in terms of embezzlement or just inefficiency. So they need to protect it. They need to have accountability systems. They need to have income testing, typically by a third party, where income audits. You look at Fortune 500 companies and they spend millions of dollars a year on external audit. What's the difference between Nabisco and my dental practice down the road that's doing 1.5 million? Because, it's still a relative percentage of inefficiencies or misappropriations or potential embezzlement. So they have to put those processes and systems in correlation with their tax strategy first. So I look at it, protect it, internal controls, accountability systems, and income testing is the first thing that they need to make sure they take care of.
So you made a statement there. I'm going to pause you for a second because I don't think I've ever heard this statement before. And if I can quote you, I think correct. You said the tax code is an awesome wealth building tool.
That's correct.
That is a powerful statement, Chris. Let's pause for a second and let's unpack that one statement. Can you tell me a little bit more about where you're approaching that statement from?
Sure. The tax code, a lot of people look at it and, they hate the IRS and they hate taxes and they hate their tax return. And a lot of times they don't really like their tax preparer.
Right. Yeah, you're right.
But that being said, if they're playing the game the right way, the tax code is there for the government to direct the population and the businesses on what the government wants us to do as a society. So they're passing regulations and laws, and there's tax loopholes everywhere that if you just take advantage of it, you will minimize your tax liability immensely. And that's why you look at the effective tax brackets of the highest income earners, and they're not sitting at 37%. And, they'll say, oh, my gosh, XYZ, who ran for president, is paying an effective 20% tax bill.
Right.
Or the Oracle from Omaha, Warren Buffett, who just had 47,000 people in Omaha last week, is paying an effective 12% tax. It's because he's playing the game the right way. And that's no different than how it applies to everyone else. Let me share a quick fact with you. If you can reduce your tax liability by 10%, and I'm not saying going from a 37% bracket to a 27% bracket. I'm saying knock off 3% off the 37, right?
Right.
If you take that savings, you can mathematically model this, but if you take the tax savings and if they just put that money with their investment advisor and you put the compound interest on that on a 20-year run, that's 7 figures plus differential in their wealth accumulation.
Oh, that's no doubt. I would agree with that. So the way I often say, I think you and I say the same thing. I say, the majority of the tax code is to show you how not to pay taxes. There's only a very small amount. Actually, you can put it within a paperclip amount in the code that actually tells you how the amount of tax you're going to have to pay. And so
That's correct.
I think what you're saying, and which is what I echo all the time, is that we are to hire as business owners those individuals who are forward thinking enough to challenge us in our businesses to minimize that taxes. And I've never heard that 10% calculation either. So you taught me two cool things today. I'm going to have to chew on for a little while. I may end up having after this interview, having to take a vacation just to learn from you, Chris. But no,
I'll go with you.
I hear you, brother. Yeah, we just did get through tax season, didn't we?
That's right.
The other thing you said, which I think is key, and I want to unpack it a little bit further, and that is accountability. And I think oftentimes entrepreneurs, no matter what level of business they're in, they view their tax team, whether it's the preparer or the planner, as someone who's there just to fill a need, as opposed to someone who is there to provide accountability for their long-term plans. Can you go back and unpack that one a little bit on what you meant by accountability with the preparer?
Sure. The accountability with the preparer, again, the onus is on, like you mentioned, forward-thinking tax strategists, people that are trying to deliver high-value returns on investment to their clients in the forms of their tax planning. The accountability on your preparer is to bring ideas to the taxpayer. All too often I'll get clients that come to me and say, man, I feel like I'm taking all the ideas to my tax guy. I mean, and I always take them to him and he shoots me down. He's like, no. And he fills in the box and says, you had a great year. This is what you owe. Mm-hmm. From our side at Mahan and Associates, our accountability to our clients are twofold. First is we're going to always continuously look for every application and idea of the tax code that we can apply to their business to save them tax dollars, period. Second is I have never been fired for telling somebody they owe $1 million on April 15th. Right. Well, I take that back. They're going to owe $1 million on April 15th. What I get fired for is if I don't tell them that until March 15th.
That is correct.
So the other accountability system is we have to do tax projections that drill down their forecasted tax liability, because as long as they know it's coming, they can plan for it. And then if our accountability is to give them a customized tax plan specific to them and their business to show them how we can save them $20,000, $30,000, $100,000 in taxes if they do this hit list that's built for them. So that's the accountability we have to our clientele, and that I know that a lot of great tax preparers out there do as well. I urge that all the business owners out there search for that tax preparer that is going to fight for them, that's going to have the energy and proactiveness to keep them informed throughout the year of their forecasted liability, and also help them customize a tax plan to reduce it materially. And if they feel they're getting ideas and therefore they're getting the value, the bottom line numbers are fantastic.
So before we jump on the second question, I think I've got a segue question here based on what you just said. We can't obviously disclose who our mutual clients are, but we can talk in jest or in reference to them. You and I, we will during the year with our couple of mutual clients we work with, we will have anywhere between 4 to 8, depending on the year. Probably this year after the new tax law, we're going to be talking a lot, I can imagine. But we would have 4 to 8 different correspondents from different perspectives showing the mutual client how they can minimize the taxes from your perspective, from my perspective, and even if we had to a tax attorney's perspective. And when the year wraps up, I know that November and December last year, my experience working with your firm and many other good planners, tax planners, is that November, December, everybody knows what to expect and what the last little moves are during the year. What is the process that you expect clients to go through to mitigate that surprise in April of the following year? Does that make sense?
Are you asking? Are you asking the process that we go through to deliver the tax plan, or the process that they need to do to enable us to do that?
Thanks for clarifying. Well, the first thing I want to do is I don't want to give away any of your proprietary secrets that you use in your practice that would harm you. Okay. So, so I think both of those could be unpacked. I think we have to deal with it from the proprietor's level. What exactly do they have to do during the year? But more importantly, many times the proprietors look to you and or the other tax planners to say, hey, tell me what to do. Many times they don't even know. This is like Russian, trying to learn the Russian language to many of these folks.
Exactly. No, that's great, man. I'll hit both of those. First, the client's responsibility or their buy-in into their financial success and, hence tax savings is they have to invest in the accounting and or bookkeeping processes throughout the year, because you and I can't coordinate, because on the clients that you and I both mutually work on, you and I have already spoke 4 times this year, and it's only May 10th.
Right.
And we've already spoke 4 times, and that's via email, conference call, et cetera, already planning for them. And they're going to have a tremendous return. But those clients also invest in, your ongoing services to help them make and save money, as well as ours to do the bookkeeping and the financials and the quarterly financial statement reviews and benchmarking, overhead management control review, et cetera. So that I think a lot of business owners sometimes are penny wise and pound foolish, where they're saying, man, I don't want to have that expense of, the accounting or bookkeeping on a quarterly basis, or whatever additional services are needed for us to be able to advise them on the taxes. So that's the accountability on the client's part, is to, if they invest on an annual basis, on a continual basis, to know that the bookkeeping, financial statement preparation is an integral part to the tax planning and can save them a ton of money, that's their buy-in on that side of it.
Right.
On our side of it, we put together throughout the year at, the June 30, the second quarter financial, the third quarter financials, as we prepare them, we put together tax projections, and we basically annualized all their income components and any unique events or occurrences that are happening in that current year. So they know, hey, this is the year that I need to go buy that piece of equipment. This is the year that we need to add a defined benefit plan on top of our 401k plan. This is the year that we may need to consider doing a conservation easement. This is the year that we need to look at putting our kids on the payroll. So we go through the checklist and we do it on a timeline, because there's not a cookie cutter. If I had a cookie cutter tax plan that I could put on everybody, man, we would be doing this podcast from a suite in Cabo right now.
Seriously.
But, so it's customized specifically to the taxpayer. So they have to invest on the side where we can do that in-depth review of their business performance. And then we invest and we put together the projections and the customized tax plan. So I don't know if that answers the question.
It does. It does. It helps me out a lot. And I think that segues to my next question. And that is, what is the biggest mistake that you see small business owners make from a tax perspective?
It's all about proactivity. Again, I believe a lot of times, a lot of people, it's kind of like close your eyes and the monster will go away. And, I think it's being proactive, or the lack of proactivity, when they need to embrace the tax code, and they'll save a ton of money. If they come into January and February saying, what is the tax strategy for this year? Year after year, they will create immense wealth and save a lot of dollars that they write, and have a lot more peace of mind because they're always informed. The biggest mistake I have is when I have clients come to me in September, and this is after they've been extended, and say, okay, here's my W-2, and I sold a condo, and I sold this house, and I sold this car, and I traded in my car and got a new, all these things. And I can't help them then. Right. That's when I basically turn into a form filler outer. I'll apply everything I can, but my hands are really tied whenever they have their, the eyes closed until they absolutely have to get the return filed. So again, I think it's the proactivity and the strategic investment in the strategic planning.
I think you're dead on that, man. I really do.
You are listening to Financially Simple, destroying the complexities of money for today's small business owner.
Let me turn this ship really fast on this next question. Sure. And let me lay the groundwork so you can pull your thoughts together on this one. The question's ultimately going to be is, what warnings can you give clients about what you and I see as tax schemes? Let me lay a little bit of groundwork for that. You and I have been in business long enough that we know that, let me with kindness pick on the medical profession a little bit.
Sure.
Many times you and I see that medical professions want to know the biggest, the newest, the sexiest thing out there in the tax planning world. And many times they'll do it so they can brag around the circles of their peers, or get on Dental Town and their dentist, like you and I often see, and say, hey, I'm doing this crazy erotic type of tax structure. But Chris, I can remember way back when Squirrel Trust came about. I can remember some crazy things that came out, and it could have been viable, but then the service gets wind of it and they private letter ruling or do audits or a number of other things. So I pull all that back into, with a lot of entrepreneurs, once they get that huge first tax hit, 100,000, 200,000 tax bill, at that point they're screaming, and now they become, you're my best friend. And now they become Google experts overnight with tax planning experts. What is the warning? What would you give as a warning, or how would you help unpack the warning to tell clients that, look, there are actually tax schemes out there which could be dangerous for them?
Oh, no, yeah, I mean, that's a great point. I appreciate that question because I've had clients that have left us and done exactly what you said, and they went to some seminar at the Embassy Suites,
right,
and got involved in, some type of tax schemes where they're, what is that, the patriotic citizen deal,
yes,
I've seen some ministry set up. And here's the deal. Basically, if it sounds too good to be true, or if it has the slightest whiff of, man, I need to check on that, do your due diligence. They need to do their due diligence. And I would recommend that any tax, strategy, because I love tax strategies, and I look for any tax strategy we can encompass and employ for our clients to legally save as much money as possible. But sometimes, as you mentioned, some of those strategies, it really comes with the sniff test.
Right.
So, you know what? Would an IRS agent look at this and say, yeah, man, you figured out this loophole and you don't have to pay any taxes, it really comes with a sniff test. And I always recommend, even whenever you're moving for two tax advisors or looking at different tax strategies, ask for 2 to 3 references for people that you can talk to that have utilized that. And also potentially get a third party to just review the tax strategy to get you an independent opinion.
Would you agree with me that, and I got to carefully pack this one for you and I because what we deal with, would you agree with me that it's sound wisdom whenever we're dealing with taxes that you have the 2 or 3 different professionals from different viewpoints look at anything? I mean, you mentioned earlier, Chris, you mentioned conservatorships. You and I both are very handily on those. I like to use charitable trust. I like to use that as part of planning and part of taxes because of many of our clients that you and I know and we're part of the country, and we're very philanthropic people. Man, some of these things can get somewhat crazy really fast, and some of these strategies can, at the opposite side, they can sound erotic, but simply they've been around for 60, 70, 80 years in the code. With oftentimes the strategies that good tax planners and good CFPs and good tax attorneys, when they put their brains together, don't you agree that the client wins when they get as many professionals who think differently together to help avoid these crazy Google tax schemes from coming into their plan?
100%. I think that's a great point, Justin, is that, in the clients that we mutually serve, and I hope that, other taxpayers have a similar team of independent professionals that are working together. Whenever you and I are sitting together and we're masterminding or kicking ideas back and forth or presenting new ideas, it only makes us all better, and it makes the client in a much better position. Again, instead of having to go get, some independent opinion from a tax attorney about this tax strategy from this tax preparer that they may or may not utilize, they've got a team of professionals that are working off of each other. And, again, that's what the top 1% do. The top 1% in this country have the family office concept where they have their tax attorney at one cubicle and their financial planner at one and their accountant and bookkeeper at the other. And that's what utilizing a solid core team of, I would say anywhere from 3 to 4 advisors that work collaboratively together. The one thing that I enjoy with you, Justin, is that we have a very open relationship where we work with each other for the betterment of our mutual clients. Right. And I see a lot of times, and I don't know if you said, but I see a lot of times where it's so polarized. It's like, oh, the investment guy, won't send me my documents to fill out the tax return. And, if they can find the right partners that are working together and collaboratively. I mean, how many times do you and I have conversations that our clients don't even know about?
Oh, yeah. Yeah, often.
And that's something that's, that truly serves the client much better.
The last question I would have for you is more broad-based, and that is, given the new tax code, and I know this, Chris, you and I have spent a little bit of time chatting back and forth about this through email. I know you have dug into this thing. I've actually read the whole stupid thing like twice now, trying to make sure I understand it. With this new tax code, from a macro level, do you view it as a positive for today's small business owner, or do you view it as neutral for today's small business owner?
I view it as an immense positive, and it's laden with tons of opportunities that they should be utilizing now. They should already be incorporating their tax play right now instead of waiting until, September, October, which has historically been better than most. But if they need to be incorporating the different opportunities that were created with this tax legislation, and I think it's a tremendous benefit for small business.
I agree with you. I agree. Thanks for that insight. So let me ask you what would be the one question that you would say, Justin, I wish you would ask me this? Is there a particular question maybe I haven't asked that you'd say, Justin, your listeners really need to know this one point? What would that be, Chris?
That's a deep one. You've done a great job being very thorough in the questions.
Well, let me talk for a little bit while you're thinking about that, because, with the new tax code, I'm going to go back on that last question while you chew on that hard question. I'm sorry for surprising you like that. That's my fault. Mm-hmm. With the tax code, you and I are already digging into this, and you made a point that, hey, Justin, our current clients should be actively looking at the code now. Here we are in May, Chris. Most tax planners are talking about November, December. You and I had conversations way back in January. And whenever it came about and we're saying, hey, can we do this? I mean, we've looked at crazy strategies from like conservatorship to self-leasing, advantages, disadvantages. I've even thrown out, like, I like to use CRUTs. I said, hey, here's a strategy we could use. We've looked at adding pension plans on top of defined benefit plans and just coding them together. This is a type of conversation, guys, gals that are listening to this. This is the type of structure you need to have in your wheelhouse. You need to have a planner and a tax planner or a tax preparing firm like Chris's, who's not only there just to fill out the forms, a tax filler like so many people are twirling signs on the side of the roads. You need to have a team who is literally talking constantly, thinking and reading legislation, looking at everything, saying, this is how you can minimize your taxes. And Chris, you made an excellent point earlier with just a 10% reduction. That's amazing that it would build wealth that fast. And I'm not doubting it. I've never ran the numbers, but that's pretty amazing. So with all that, I'm going to circle back around to that question. What is that question that you said, Justin, I really wish your listeners really need to know this one point? And maybe it's a point we've already talked about thus far.
To that point, Justin, I guess the question that I would say is, if you ask me, what difference does it really make?
Oh, wow. Yeah.
What difference does it really make to have that coordinated team of advisors and a true tax strategist? Because anybody can go get certain acronyms and certifications and those types of things, which I don't discount that. That's hard work and that's verification. What difference does it make to have the team behind you that has the energy and the commitment and the dedication to saving you money and getting you the best tax savings possible? And if you would have asked me, that question, I would kind of parlay it to, do they want to just have cash, now? Do they want to have a retirement 10 years earlier and a much higher quality of retirement where they can go anywhere and do anything they want? Do they want to be legacy builders and leave their children and grandchildren with opportunities to be as successful as possible? Wow. Because legacy planning, retirement planning, wealth accumulation, current year dollars in your pocket are all dividends from the tax strategy, and incorporating that with the financial advisor to make sure that, hey, I'll give you one nugget. A lot of people employ their children.
Right.
And typically they'll employ them right up to the standard deduction, and they'll have their kids out there shredding paper and cutting grass.
Right.
Well, what just went up immensely?
Yep.
The standard deduction. So they change the salary for their children. And then they say, well, what am I going to do with that additional money? And I'll say, well, A, talk to your financial advisor and open up a Roth IRA.
Right.
B, open up a savings account and stack that money and put it in an interest-bearing account with your advisor. And boom, they've got a lot of opportunities for their college funding, or some kids don't go to college, but you
right.
set them off on the right foot. So hopefully our clients, as we work together with them, Justin, they can go to the high school graduation and they're crying out of happiness for their children graduating high school. But they're also crying because they can drop the microphone and know they're done.
Right. Yeah, you're right.
They have done it all, and they've set them up, and and they've educated them, taught them values and morals and ethics, and they've also got them financially set up for whichever path their children determine to take.
Dude, that is awesome. That's some of the best insight I've had out of any interview. That's powerful, Chris. Thank you so much. That's heartfelt. I know you mean that because I watch you live it in your practice. So that's pretty powerful, man. So, Chris, there are a lot of entrepreneur doctors who we work with, or there's going to be a ton that's going to listen to this podcast. If it's an entrepreneur doctor out there, or a doctor that has a question for you in the medical world, how can they get a hold of you? A website, phone number? How could they reach out to you?
Sure, Justin. Our website is www.mahanassociates.com, or they can email me at Chris, CHRIS, at mahanassociates.com, or call our office at 615-883-7800. We're in Nashville, and the Preds got a big Game 7 tonight, so hopefully they'll make it happen.
Sure enough, man. Sure enough. That is exactly the case. So we're going to put all those numbers in the show notes for all the folks out there. And with that, I'd like to thank everybody for joining me on this Financially Simple podcast. Chris, you especially. Thank you so much.
Hey, thanks, Justin. And man, we'll be huddling on some new strategies probably in the next week or two.
Well, that's true. That's true. And, guys, all listeners out there, as always, you can find today's links, Chris's website, anything that we might need to throw as a link on here in the podcast on Financially Simple under the heading podcast. And while you're on the blog, hey, check it out. Take a look at it. Sign up for the weekly newsletter. And like I say every week, life is hard. It is. But life is good. Maybe the Preds do win tonight. And life can be frustrating. It can be just downright frustrating sometimes. But money, and candidly, in this conversation, taxes, they don't have to be. Let's continue to make our lives at least financially simple. Hey, guys, go out and make it a great day.
You have been listening to the Financially Simple podcast. The information in this show is for informational purposes only. This show is not investment advice. Instead, seek help from a competent financial advisor. Justin Goodbread, CFP, is an investment advisor representative of Heritage Investors, a registered investment advisor.